Thousands of questions about when a bull run will surface in the crypto market have been strolling in social media. Long-term holders are getting tired of staying resilient and hopeful, and almost everyone holds a grudge over their crypto portfolios. But when the moon is already visible in the sky, is there a need to jump through hoops to point it out to people? No, it becomes naturally seen by everyone. If a mega bull run will become like this visible moon, it is expedient to use the perfect strategy. Now, let's take a quick flashback to 2021. Cryptocurrencies were smashing all-time highs and sweeping investors off their feet. Things were going smoothly, and several bullish predictions revolved around the crypto market. A mega bull run was projected for Bitcoin in 2022, along with other cryptocurrencies, and a crypto influencer known as Lark Davis stated different reasons why the rosy moment in crypto would extend to this year. According to Lark Davis, the phenomenon of lengthening cycles of Bitcoin and the entire cryptocurrency market was already more than a hypothesis. Based on historical analysis, each successful Bitcoin cycle has been longer than the previous one, and the significance of the 4-year halving rhythm was slowly diminishing. Davis argued that as a result of the lengthening cycles, the peak of Bitcoin's price would be in 2022. However, dips in Bitcoin replaced the speculated peaks. The crypto influencer also vouched for Ethereum network upgrades. The transition to a proof-of-stake protocol sounded too good to be true, and he believed that it was capable of triggering a quick bull run. This has not been the case, and the Ethereum merge has not had a significant change in the Ethereum's price. Well, the crypto market has always been like that. Sometimes the real state of crypto needs to be suspended just to appease investors and encourage long-term holders. There are so many factors that can spur a bull run, but most of them have not been discovered. Yes, 2021 was a good year, and it was only normal for investors to get more excited about 2022. However, expectations are not a match for the notoriety of cryptocurrencies. History has a lot to tell. Bitcoin is tumbling in its price, Ethereum is on the brink of an earthquake that can wreak severe havoc, and Cardano is in battle with fear from investors and price dumps. After a crypto exchange chief executive warned that anything can happen during the current crypto winter, some predicted the Fed would soon trigger a Bitcoin and crypto price bull run. During a podcast, Bill Barr, the chief executive of ABRA, explained that a great pause will come when the Fed's dramatic rate inclines have fulfilled the intention of slowing price inflation. Fed Chair Jerome Powell has given his word that he is prepared to raise borrowing costs as high as needed to reduce inflation. Quote, "I think it's really going to be game on for equities and crypto as the money supply starts to increase dramatically as a result of the Fed's pause and expectations in the bond market that we are going to get back to the kind of downtrend channel that interest rates have been in for the last 3 decades, Bart said, predicting the long pause to occur in October and extend to 2023. Drawdowns often make for a good time to buy, and that's what some crypto experts would tell you. However, it can get even worse and stretch you to the breaking point. Well, over time, the market is likely to rise above its current level, especially since the Fed is unlikely to stay on the sidelines if things get truly bad. But according to the Cardano founder, there is a perfect strategy to heal the market and welcome a mega bull run. Charles Hoskinson has proposed that the Financial Invocation Act offered by the US is capable of initiating a mega bull crypto market run, which can assist the prices of leading cryptocurrencies to surge beyond their usual price threshold. In a video interaction with Cheeky Crypto, Hoskinson called this strategy a key element of the domain that is sufficient to activate a mega bull run. According to Hoskinson, if the US government passes the Financial Invocation Act, the decision will play an instrumental role in triggering a massive bull run, thus directing other cryptocurrencies to soar in valuation. If the bill gets a green signal from the US government, it would allow blue chip investors to invest hefty amounts of capital into the crypto markets and help reduce certain regulatory risk attached to investing in the digital asset domain. Quote, "I have been through 7 bear markets since I joined the cryptocurrency space, and this current market is no different. It could last 18 months, it can last 2 years, and it could end at the end of the year, who knows? But if America passes the Financial Invocation Act, we will probably see a mega bull market because a huge amount of money would enter, and also all of the regulatory risk with crypto would disappear," he said. The Financial Invocation Act, which seems to be good in the books of the Cardano founder, was earlier proposed in June by Republican Senator Cynthia Lummis of Wyoming and Democrat Senator Kirsten Gillibrand. According to the reports, the bill seeks to establish a thorough regulatory framework for the digital asset domain. The US government has recently reinforced efforts to draft a comprehensive that actively aims at managing the crypto sector activities with extreme precision. Of course, digital assets have the potential to propel innovation in new and revolutionary ways, but with the market's volatility, providing a proper regulatory framework is essential for the industry to thrive. This will help foster investor confidence and economic growth and, most importantly, usher in a mega bull run. During a 90-minute long interview, Charles Hoskinson further explained his stance, stating how excessive scrutiny could be detrimental to the sector and might end up choking the emerging crypto industry. If people like Gensler are empowered, we can see a mega bear market as a massive amount of litigation occurs and all these poor entrepreneurs just basically get out of business by the heavy-handed government, Hoskinson noted. But what do you think about Hoskinson's opinion? It's important to note that Charles Hoskinson is dubbed as one of the most outspoken crypto experts in the industry. Recently, he expressed his candid opinions about the central bank digital currencies, or CBDCs for short. He made the headlines after cracking down on CBDCs in an interview. Charles Hoskinson thinks CBDCs are the single most dangerous innovation concerning monetary policy. Many nations around the globe are exploring this notion. According to him, CBDCs are not crypto assets. They might pose like one, but they are not. And he emphasized that he is never going to support them in his entire life. He further explained that it is a system establishing a monopoly and obscuring the financial autonomy of the people. It is also capable of emptying people's wallets in a blink of an eye. To support his points, he painted a scenario putting ethnic groups in the center. He stated that if a government is in control of a CBDC and an ethnic group oppresses them, they have the power to stop the supply in their digital wallets. Simply put, they can empty their wallets in seconds. So, is Charles Hoskinson always right? His defenses are valid, although they have always hinged with a bit of criticism. He has recently gotten into a Twitter feud with the Ethereum devs over the limitations of the Ethereum merge. Many cryptocurrency prices have backed off from their session highs with the market downfall, but they will boom soon. In the recent past, there were several upgrades for Cardano. The Alonzo hard fork was the most outstanding out of all of them. It attracted the attention of a lot of people as the upgrade brought a massive change in smart contracts. The Vassal hard fork is the most recent upgrade, which had a profound impact on Cardano ADA. New capabilities, including node and CLI support for reference inputs, inline datums, and reference scripts, along with a new Plutus cost model, are now available on the Cardano mainnet. The upgrade is considered bullish for ADA, even though the general crypto market correction has overshadowed its influence on its price. According to Charles Hoskinson, people can let you down, but the point of decentralized projects like Cardano is to create a system that drives away from human failures. The entire point of labors of Cardano and all these other projects has always been to take things where we can't afford people to let us down. Our money, our privacy, our life, our liberty. Put them in the hands of agents who can never let us down by design, he said. He has assured the Cardano community that he intends to press on with the work that needs to be done. However, the progression of that work is tied to the acceptance of his opinions about the Financial Invocation Act. But what are your thoughts on this? Let's have in the comments section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.